Heidi ho, everyone, and welcome aboard. It is nice to have you back for 2024. And no, it isn't Christmas. I know it's not Christmas. Let me fix that. Well, if I can remember how. Yes. Okay, that's how you do it. Trading buddies. That's the one we need. Not that one. Trading buddies has disappeared. How bizarre. Try that. Okay. Again, welcome aboard, everyone, and thanks for joining Trading Buddies for 2024 edition number one. It is nice to have your company. I don't think anything's changed too much, but those of you who are here for the first time, welcome to you, and don't be afraid to put anything you like into the chat box in terms of questions or ideas. This show is all about sharing ideas, perhaps trades. If you've got any, you want to show some charts, you want us to give you our opinions on your charts or your ideas, then that's what the show is all about. It's all about sharing. And I'll be sharing my thoughts very shortly. Ash will be coming in to join me to share his thoughts. And I believe, or I hope, George is back in 2024 and he'll be here as well. So three of us will share our opinions in separate fashion. And then it'll be open to you guys to share yours or ask us questions or do whatever you want. Righto, let's get stuck in, shall we? And if I can find a screen to share. There's one. However, it doesn't have a thing on it. Try that. Guys, I'm hopeful you'll let me know if you can see my gold screen, which is on an hourly chart. And the reason for that is that we're looking for a breakout trade on gold versus the US dollar as we look to open London session, or we won't be opening London session, but the open of London session is where we will hope to catch this breakout, if it is indeed something that I want to trade. Look at Friday, goodness gracious me. It's kind of formed its own rectangle, hasn't it? All right, so those of you who are new, here's what we try and do. Thank you very much, Lexi, and Happy New Year to you. Looking forward to catching up in Bali in about, 10 weeks or something? That'll be fun. Right, I was about to explain what we're doing, right? We are looking to trade the breakout of pretty much Asia session, which begins on the second 1 hour candle of the day, which is that one. And we established the high of the range since then, which would be that high there. So we isolate that. And then we isolate the low of that range, including the current candle. So the current candle is here, but the range has been lower, or the range has been extended further than that. And there is the low of the range. So we'll put a boundary on that one as well. Now, what we seek to do is trade the breakout long with the stop loss underneath the low of the range. And we at the same time place an order short underneath the low of the range with our stop loss above the high of the range. Now, I know just by looking at that chart very, very briefly that I've got absolutely no interest at all in trading this breakout today. Why? A couple of reasons. One is that we've got about $20 in play already today. And I don't even want to go back and have a look at the ATR of gold over the last, 6 or 7 weeks, maybe even the last 3 or 4 weeks because of the holidays. But it looks like there has been some movement to the downside. But $20, if you have a look at Friday, as I said, it's established its own range. I don't want to be trading short into that low, and I don't want to be trading long into an untested weekly pivot with the monthly pivot not too far away. So I'm not going to take that trade today. It is Monday after all. That may or may not be a difference. The difference normally is that Monday is a pretty quiet day. And for that reason, I don't want to take it into a short here just to hit that level and go back into the range. And similar to the upside, hit the weekly pivot and come back into the range. So not interested today. I will, however, comment on gold, just in case you want to know my opinion. And my opinion goes way back to the monthly pivot. I'll get my foot out of my mouth in a minute. Goes way back to the monthly chart. And the monthly chart, very, very, very clear that price is not happy above the $2,000 mark. Hasn't been pretty much since the, I was going to say global financial crisis, but this is where COVID hit in March of 2020. Actually, is that March? That is indeed, let's call it August. But since COVID, we've been in that range pretty much. And we've had a false break to the upside most recently. To trade that anywhere at the moment, in my humble opinion, would have to be to the downside. That's my humble opinion. So that's my directional bias and means absolutely jack. Unless, of course, it does go. What I do see here currently on the weekly chart is a double top. Now, people will argue with me that, okay, that's not a double top because that one's much higher. I don't care if it looks like a double top and it smells like a double top. It's probably a double top. And for mine, that's a double top, which was succeeded by, well, some would say a lower high. I would say the lower high is not really confirmed yet because I need to see two candles either side of it to call it a lower high. But that's exactly what's in my eye and my mind's eye at the moment. So I expect once I see a double top and a lower high, that price will fall. To where? Great question. And generally that answer for me will be to the breakout area, which I suppose was probably here. So I've still got a little bit of downside to go. And that's what I'd be looking for if I was trading gold at the moment. It's also evident to me that we've been in a rising channel, and that channel was last visited to the top side. And when I see that, I expect the bottom side of that channel to be tested at some stage. So it's all bearish outlook for gold from my point of view. Can I trade it at the moment? Well, I don't see anything there that really gets me interested, to be fair. So I won't be trading that until I get the setup. Now that setup could well be off this trade line. And what I'd like to see is price hang around here for a little bit, then break that, hit that resistance area around about 2045, let's call it 2050, then shoot back underneath it. And then I can look to trade it short because it would tell me yet again that we've got a false break of resistance. So that's gold for me. From on a technical basis, Ash will update us on fundamentals and indeed the seasonals on gold when he comes in a little bit. Now, my week looks pretty much like this. I look for game changer bars. And for those of you who've got no idea what I'm talking about, game changer bar for me is simply a key reversal bar. Okay, if you don't know what a key reversal bar is, here's the thing. So when I look for a key reversal bar, I'm looking for, or candle, if you like, looking for a candle whose high is higher than the previous session, in this case, the daily chart. So the high of this candle is higher than the high of that candle, and this candle has closed on or near its low. That's the definition of a key reversal bar or key reversal candle. I call them game changer bars. And the reason I call them game changer bars is they're only relevant to me if they're actually going to change the game. What do I mean by that? Well, if the market's going up, I want to see a reversal bar, key reversal bar, that's going to change the direction of the market. So if the market's going up, I want to see it going down, right? Now, I also need a couple of other things to be in context with that, and that'll be a resistance level, or it'll also be the dominant chart pattern of the month, week, year, and that quite clearly to me at the moment is down, 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 down. So I'd be willing to trade a key reversal bar short, but I wouldn't be willing to trade a key reversal bar long because it's against the overall chart pattern, if you like. So that's a key reversal bar, and I'm looking for them on the weekly chart at the moment. And the weekly chart has given me 4 or 5 of them. I'll quickly go through them. Aussie versus the yen is one. I'm actually in an Aussie yen trade short at the moment, but the key reversal bar is telling me to buy Aussie versus the yen. Come back to that a little bit later, and I may well place an order long on Aussie yen. And the reason for that is because I've got a lovely resistance trade line here. If today's candle were to close pretty much as is, I didn't want to go, well, I do want it to go further down because I'm in the short, but if it were to go, and engulf that bar, for instance, I wouldn't look to be trading it long. But if it stays as it is, I would look to put an order above that bar with a stop loss, probably below the swing here. But I'll come to that a little bit later if I need to do that. But the weekly game changer is telling me to go long. And going back to what I said before, if you have a look at the big picture is probably in agreement with that directional bias. So Aussie yen long, not trading it, as I said, on the weekly, but I will have a look at it on the daily tomorrow. Aussie versus the Kiwi short. This is a clear game changer bar where we have been going up for 4 or 5 weeks. And this is looking to reverse that and go short. Terrible place for mine. We're in the middle of nothing, or as my old mentor used to say, I can't remember what he used to say. He's in the middle of nowhere or something like that. No middle of something. Well, it wasn't the right expression. Anyway, what I see here is a non-event. I can't trade this short or long. I need to see a resistance area to trade it short, or I need to see a support area to trade it long. I see neither. So I'll wait till they hit the boundaries until I get interested in Aussie versus the Kiwi. CAD versus the yen on the weekly, suggesting that we're buyers. I'm not a buyer at this level. There's a clear toppy scenario here, and I wouldn't want to be trading into that without getting some profit in the bank. So not interested in CAD versus the yen. You'll find that there's a lot of yen pairs this week that are very, very bullish and have presented with key reversal bars. I'm of the opinion that that is incorrect, but they are with trend, of course. The yen has been just the ridiculous joker in the pack, if you like, in reverse. It's been a joker because every time it rallies, it gets knocked over. Is it different this time? Not sure, but we'll see. So euro yen suggesting that we buy. I'm not buying into that resistance level, and my bias is yen strong, not weak. And I say that with I don't know, some trepidation, because it's a very big call on the yen. It's just the most incredibly weak currency or currency that has been around for a long, long time. Exactly the same could be said of pound yen. I'm not trading into resistance. And there is somewhat of a slingshot scenario here suggesting that we go short. I've also got 3 amigos sitting here. What are 3 amigos? 3 amigos are 3 successive false breaks to the upside or the downside, going the opposite direction. I've also got, as I say, that slingshot trade line sitting there with a big, what I call +1 sitting on it. So I'd much rather be trading this short than long. For that reason, I'd be looking on a smaller time frame, maybe a daily, maybe even 4-hour, for a false break of resistance. I don't see it at the moment, but I do see that box range that's been formed on the daily. So I'd be looking for either, as I say, a false break of resistance or a bounce lower high off these 3 tops. Then I'd look to trade it short. That's pound versus the yen, and surprise, surprise, there's another one versus the yen. It is Kiwi versus the yen. G'day, Lewis, how are you, mate? And it's suggesting on the weekly that we, yes, buy it again. And once again, not for me, because exactly the same rule applies, as does on the pound yen, as does on the Aussie yen, as does on the Kiwi yen. They're ganging up on the yen again. Maybe this time they fail. We'll see. That's my humble opinion anyway. I do have a watch list that doesn't include the yen, and it does, however, include its bosom buddy, the Swissy. I've chosen Aussie versus the Swissy. Let me go back there. First up, Aussie versus the Swissy, because of what I see on the weekly chart. And I see a double bottom on the weekly chart, followed by a potential higher low. Hasn't really formed yet, or has it? Not sure. And that's the reason I can't just jump in here. What I would be looking for, once again, on the daily chart, and this one interests me because of this scenario as well. We've got a clear box range sitting in here. We've got broken to the downside. I'm looking for price to come back into that range, retest the bottom of it, and I'll be trading that long. Absolutely. Same could be said of Kiwi versus the Swissy, and we'll get there in a moment. And that's my favorite one of the week, Kiwi versus the Swissy. Euro versus the CAD, for a very, very similar reason. We're in a box range. We've come off the top. I'm looking for a lower high, false break of resistance or something of that order. Maybe there's even a 4-hour trade line there, but the daily, if it got above there, came back underneath it and retested it, I would look to trade Euro versus the CAD short. And as I said, my favorite one of the week at this point in time, and it's very, very early in the week, is Kiwi versus the Swissy. And I'm looking to buy it. Exactly the same reason as I said, Aussie versus the Swissy. You could call it the same chart, double bottom. A little bit different because we've now had a higher high and a higher low, or a higher low forming, sorry. And once again, I'll be looking for a false break of both the rectangle and the trade line that's formed here. So breakdown, depending on how that forms, if it was a clear bear bar and a decisive bear bar that looks something like that sitting over here, I'd actually buy that bar. But I could also wait for price to consolidate under here, back above it, retest it, and you know the rest. This one on the weekly chart is probably tradable. And the reason I say that is because of the slingshot candle patterns that I've got sitting here. And I'm getting warnings that if price comes back to here, it's going to accelerate and maybe fill this range in up here somewhere. Am I going to trade that? Well, no, I'm not. And the reason I'm not is the strategy calls for an entry above that bar there, above the red bar. So entry here, stop loss below the range, and look what I'm trading straight into, this level here. And I just can't do that. My rules won't allow me to. However, two ways to trade this would be, once again, back to that chart, false break, like I said, or, whoops, wrong way. We could wait for a higher low based on this this double bottom sitting here. So either way, I think that's my my chart of the week, Kiwi versus versus. I'll get my mouth working at some stage today, I hope. The Swissy. Ash, my man, happy New Year, buddy.
Happy New Year, mate.
Are you well?
I'm all right. Yeah, I'm all right. I think you know, easing into the year. I've got to be honest. I've found I traded last week, and it's been a strange one because everything I picked was right direction, but my timing or my entry was run over. And I can give you a quick example of that. Good morning, Lewis. I will give you an example of that because, I suppose it's in a way the nature of the beast when you kind of start the year. That so you've kind of got to make sure you ease into it. Now let me just give you this one here. So the example.
January's normally hopeless for me, as you know.
Oh, mate, yeah. Well, I think I'm starting to come around to your way of thinking. This was the example.
I've switched. I'm going okay so far.
Oh, well done. Okay, well, mine was gold. So gold, I was, you know, I was looking for some downside, and actually, I traded this particular period here. This was just after some US inflation data, which came out slightly hotter than expected, and I was shorting gold, and stops were just above there. I don't think I had them above the monthly pivot, but I may have done. But the point really was that it just took off to the upside, took me out, and has ended up doing exactly what I'd hoped it would do in the first place, which was come to the downside. So I'm finding that sort of like it happened a few times.
That's a classic re-entry there, though, isn't it? Really? Because
yeah,
you've got a head and shoulders, break the neckline, retest it, and away it went.
Yeah,
Yeah,
absolutely.
awesome.
Yeah, the head and shoulders there, absolutely right. And yeah, you know you're right. That would have been a great place to try and get in. And I maybe I would have tried again, but I was jaded by that time. I was just like everything that I'm doing, I just couldn't buy a win last week at all. It was very difficult to kind of um just get in a position where the stops were in the right place. And I guess this is a bit of a liquidity issue. Is that the liquidity is just
Mm.
coming back into the market. It was very light liquidity towards the end of last year, so the markets were kind of popping around a little bit, maybe sort of a bit more gently. But as soon as liquidity kind of like comes back into play, then the market becomes just a little bit more jittery, and bars like that just do not help at all. So yeah, I'm easing my way in, mate, and now when it comes down to gold, I think this has got further to come to the downside, but there's no entry for me there. Dollar is relatively strong. I thought what was quite notable was another CPI number this morning from a country. So Switzerland reported CPI coming in at 1.7% from 1.4. So there's a 0.3% kind of increase in CPI data. So inflation data has just picked up a little bit. Now the same happened last week with the eurozone, and the same happened last week with the United States as well. So I wonder whether we're going to get a little trend going on as we start the year where um, inflation just sort of suggests that it hasn't completely receded and gone away. Singapore
Yeah,
was
well,
actually
the same happened in Aussie in November, remember? And
yeah,
the RBA raised interest rates.
right,
So
right,
this is
which
interesting
interesting territory,
occurrences
isn't it?
going. Yeah, it
Yeah,
really is.
it,
And
it is.
we've got US and someone else has got CPI this week, haven't they?
Yes, the US. It probably would be the UK, but let me just double check. It's yeah, I think it's the concern. Yeah, Eurozone CPI last week. It came in weaker than expected, but it was above the prior. So 2.9%. Expected was 3, but the prior was 2.4%. So another little increase in CPI data from both the Eurozone and Switzerland. Now they're probably a little bit more tied together than other nations. So then it might not be the trend. It might be that it's just a little bit off. Um, and some manufacturing prices from United States were quite robust, and you see the jobs market again being quite robust, which is that's what I was trading last week. It wasn't the CPI, it was the jobs data. So the jobs data came in a lot more robust, and there's certainly some expectation that the Fed is probably done, and an easing will probably come next. But it might not happen. We might get a situation where the work that has been done on inflation has halted a little bit, and we might need to sort of either stay where we are, or there might be another possible raise. I'd say it's very doubtful that there's a possible raise. I think when you see numbers from the eurozone at 2.9%, so near 3%, I think that there would be probably an expectation that they can just let things just flush through the system a little bit further, because it's still relatively early, after we've kind of had that just explosion of interest rate rises to get an absolute result. The UK is way off as well, with its inflation target. So, there's still work to do, but I think we stay where we are for a little bit longer. Market expectation is all of a sudden, that they see a little bit of inflation kind of coming down, and all of a sudden it's like, right, the Fed are going to weaken, the eurozone is going to weaken, everything's going to kind of come down. And of course, the big caveat is that recession concerns are still floating around. China is still kind of like providing really mixed data. The Eurozone's providing mixed data. I think there's still quite a lot of weakness out there in the market. But it's making the picture quite difficult. It's making trading quite tricky. It's quite a tricky dynamic. FTSE 100 is easing to the upside, and when you look at the FTSE 100 on the longer term timeframes, actually this weekly situation here is actually relatively positive. You know, we need to get a positive week here just to suggest that we are hot. We've held above this particular area. If it's there, it might be that the area is a little bit lower. It might be sort of like looking at either that bar or that bar. So it's looking like the FTSE 100 may well be something to trust in if you want to go long. You look at the US scenario, big move to the downside on last week on the Nasdaq. Is it a bit of profit taking? You'd suggest it probably is at these levels. You know, we're at all-time highs and a bit of profit taking coming in down at this particular level again. It may well get another rally, but there's still some questions out there, mate. You know, I'm a little bit less comfortable after last week's trading events. Interesting your take on the yen. Yen is seasonally actually the best currency coming into this week, and coming into the next few periods.
Of course.
No, you're right. You're right, and you know, I completely echo your opinion on the yen, and I think you're very brave to take on anything with the yen actually, because it's been one of those currencies that that you can't rely on the setup. Well, you can rely on the setup actually, but you can't rely on any push after the setup.
You can't
And
on
it's
the follow through. That's exactly
no,
right.
yeah, it's very, very difficult, which makes the whole thing very difficult because, you know, what we want is Kiwi going up, Aussie going up, yen coming down, Swissy coming down, you know, CAD going up. The reason we want that is because the spread differential means that we'll get positive swaps. So trying to sort of trade the yen long is a very, very difficult task. It's more difficult than the others in some respects because you're not going to get paid to hold it overnight. So you've got to your timing's got to be better with anything with the yen in the pair, and it does make it more tricky. As the year opens up, what's the review this year, mate? What are we looking at? What's the story of the year going forward? Last year it was the Russia Ukraine that didn't happen. Sorry, not last year. That was a couple of years ago. But we've kind of had the Russia Ukraine situation. We've had inflation. We've had interest rates kind of like popping to the upside. What's going to be the story this year? And you know, if we could figure that out, it would make the whole year a lot easier to trade in many respects. It's probably not
Well, I
presented
can think of
itself yet.
three off the top of my head.
Oh, go on.
Well, one, and I'm not sure this is in no particular order. Let's go with potential escalation of the Middle East.
Yeah.
Let's go with the Red Sea scenario, where there's potential disruption to supply.
Yeah.
And let's go with Trump.
Oh, yeah. Okay.
So, you know, there's a few things to ponder there and what that means. Probably the first two are going with yen strength and maybe Swissy strength. And the third one is anybody's guess, really, in my opinion.
I tell you, mate, you know, interesting that you chose the yen and the Swissy because, you know, the obvious kind of argument for me there would be oil. And oil has been, you know, relatively nicely suppressed down here. And what's difficult, I think, about trading oil is that it seems to trade to the upside on those headlines. There is, you know, there are what you're saying about the situation in the Red Sea pop to the upside, and then it kind of comes through, and we sort of like say, but hold on, there's a global recession, you know, potentially on the cards. China's data is you know mixed to weak. So let's sell oil off, and oil comes back down again. It seems to ease the downside pop up, but it's sort of popping up on headlines rather than anything fundamental and significant. So I think oil's an interesting one, but more so because of where it now is. You know, it was a big run up. It's come down. It's kind of created this support line right along here, not far from where it was before. I'm not sure if exactly not quite there, is it? It's close. It's close enough probably to suggest that this may well be a support zone. I don't think it's the support level necessarily, but certainly a support zone here. We want to see a little bit more evidence to suggest that this pattern is probably going to break out. But oil looks interesting in this particular zone down here, and looks interesting because of exactly what you mentioned. You know, some of those kind of geopolitical headlines and geopolitical situation, the geopolitical situation that's going on. I wonder whether oil might be an interesting market this year, and that really again then feeds into the FTSE. Does that kind of
Hmm.
enable us to kind of like suggest that the FTSE's going to be moving higher as well? Um, the situation with the pound as well. Everything starts to get sort of dragged in after you start to sort of think about what could be the some of the drivers for the year. Um, but yeah, as I say, I think you're right pointing those particular things out. But I suppose we shouldn't discard oil as a potential product to trade off the back of that.
Yeah, look, there's another one, and yeah, I agree. Oil's a beast, it's really
Yeah,
tough.
yeah,
And let's not forget it can go to zero, right?
yeah,
Crazy, as crazy as that sounds, but
yeah.
we sat here and watched it happen,
Yes.
um, which was unbelievable. But yeah, there you go. Um, there's a fourth one that I really didn't mention, and for the life of me, I can't remember what it was. Don't get old, Ash. It doesn't work. What is it? For goodness sake, no, it won't come. But anyway,
Yeah,
I guess the thesis that I'm running with is we're probably looking at. Um, I don't know so much about now, and it's hard to read market sentiment this early in the year, I suppose. But I'm reading a little bit of risk off for maybe
yeah,
the first 3 months or so. I don't know. We'll see.
yeah, yeah. Well, do you know, I also find that quite interesting because the saying is, how goes January, so goes the year. And if we kind of like think about what happened last January to the Nasdaq as an example, this was the January bar here. This is the January bar. In the end, it was very weak in December. That was the January bar. That lovely hold down here. And look what happened to the Nasdaq.
Mm.
Now, if what you're saying is correct, and the first 3 months are going to be weak, if we see this Nasdaq down here, that would suggest that it's going to be a tricky 12 months. And in some respects, I wonder whether we might be due a tricky 12 months. When you think about this, what happened last year's sort of like news and data was all pretty bad in many respects. Inflation, I suppose, was easing, but it wasn't easing fast enough. Central banks were still fighting inflation, and yet the markets rallied hard off the back of the initial correction. Off the back of the 60% down, it rallied hard and just popped all the way back to the upside, and actually kind of broke it into
Yep.
fresh highs going into the end of last year. So I think that could be quite an interesting scenario. I mean, does it mean that we're down here? Probably not, but I wonder whether we might get something of a range now, a very deep range. This looks like a V-shaped recovery, which suggests sort of further upside. But I wonder whether that may well be the case. Do we actually sort of pop down and mess around here for a year? And in a way, it feels like we might be due a year like that after such crazy swings. This is back in 2020. This is back in sort of like COVID period, and it's been crazy, really. If you sort of like think the last 4 years, look at the bars in comparison, sort of like going up for the prior period before COVID. Then all of a sudden, kind of COVID hit, and it really did put
Mm.
a strange jolt into the market where it tanked to the downside with worry. Then there was market intervention by the central banks, and it just kind of like boomed to the upside. Then we get this
And of course,
situation with
everyone was at home working on their computers, and tech
yeah.
was just going nuts.
Yeah,
So
yeah,
yeah,
because we didn't see the same scenario with the FTSE. When we sort of like think about what happened in 2020 with the FTSE, it kind of recovered after COVID, but since then it's just stayed where it was. It hasn't really gone anywhere. If you'd invested in the FTSE back in 2017, you'd be no better off.
no,
After more than half a decade, you know better off if you picked up the highs. And even if you kind of like come in back in 2016 down here, you're not that much better off, I suppose. Yeah, okay, 10, 20, maybe sort of like maybe 25% better off after 10 years. I mean, it's not a great return really for an index. Um, when you compare that to the Nasdaq. But you got things like the DAX in Germany, different story, same thing. Since COVID, it's continued to move its way to the upside. Fresh highs in December, bit of profit taking probably happening now. Again, what's this monthly bar going to look like? Does that suggest that we could head into maybe a range scenario and maybe not have a year of growth? Possibly. You look at the Nikkei, which I find another really fascinating one. This one really did sort of since COVID. This one's just taken off and taken off and taken off. And with a weak yen, that would suggest that would be the case. Now, if the yen sort of like starts to strengthen, this is an obvious index to try and short. And anybody who likes the hedge trade, you're really looking at what are you short this one against. And it may well be the FTSE. The FTSE, it's a strange beast, the FTSE, but at least if it is relatively stable, it could actually sort of like do quite well. I think the oil scenario would help the FTSE out. If oil does start to pick up, then that will help the FTSE out. But this one's of interest as well to me. I get a lot more interested actually with the indexes than I do the currencies in many respects. When I
that's
think of the
interesting because I've, as you know, just taken not even renewed, a new interest in stock markets in particular.
Yes.
And I've been listening to a few commentators. They're massively bullish stock markets.
Yeah.
Mate.
Yeah.
Massively bullish.
Yeah. I know, mate.
I'm going, okay.
Do you know what? I think about this stuff as well, and I've heard the same thing, mate. I know a lot of people that are really really bullish with the stock market, and I know that they're bullish for good reason because there are indications and signals that are suggesting that we are maybe pushing out of where we were. My only sort of I guess concern with any of this stuff is that they're either paid or they are expected to speculate into the future. And it is a fool's errand, really. Trying to speculate too far into the future on too many things. So, I even though I think that the point of view is interesting, I think if you looked hard enough, you could probably find an equal amount of people that were on the opposite side of the coin or the fence. And well, therefore
we wouldn't be able to trade if that wasn't the case.
No, that's right. That's right.
Mm-hmm.
But therefore, it sort of suggests that nobody's opinion is of huge interest when it goes in too far into the future. It really does come down to, okay, how does it seem to you now? How may it seem to you in the next month to 3 months? But longer than that, I'm not sure you could really speculate too much, particularly because we've had such knee-jerk events that have happened over the last 5 years that have just they've just come out of nowhere.
Yeah.
I wonder whether we've had more in the last 5 years than we've had, in such a close proximity than we've even had in the last 15. It's just, it just seems to be bang, bang, this, then that, then this, then that.
It's actually even more. You've got to go back to Brexit and Trump's first,
Yeah.
It's 2015. That's 8 years ago.
Yes, yes. So we're almost looking at 10 years of shocks, really. There seemed to be a shock a year, and a seismic one too, not just a little blip.
No, they're not. They're big.
Yeah, big things, and there's always the sort of like thing bubbling in the background. China and the United States, how they kind of jostle for top dog position, and trade war potentials kind of coming out. Lewis sort of talking about the Saudis and what they might do with oil. Russia might do the same thing with oil. UK stepping in. Interesting, mate. But we sort of talked about uranium over Christmas a little bit. UK stepping into that market as well. COP28 really sort of, pushing for a change in climate change direction. I think globally we see that probably that narrative kind of picking up pace as well with the extremities that we've had environmentally over the course of the last 2 to 5 years. That there are things that are picking up pace, very much picking up pace, and the world's view is changing, and also the way that we do things is changing. I was in London for over the Christmas period, and I went to Hamleys, and I don't know if you've ever heard of Hamleys, but it's the oldest and biggest toy shop in the world.
Gonna say it doesn't
And
sound like it's a pub, otherwise I'd heard of it.
no,
Yeah.
no, I took my daughter there, and it was quite notable because Hamleys' prices are three times the price of Amazon. Now, if it was 20 to 30 years ago, if you knew that Hamleys was three times the price of a shop down the road, a shop in another city, you probably would still buy from Hamleys because you're not be able to get that to that city.
Hmm.
But we're not in that situation now. I was literally on my phone going, well, that's three times more expensive. We're not going to buy it from here. And that kind of suggests that things will never be the same again. London felt actually quite quiet to me. It didn't feel anywhere near as buzzing as it was. People are pushing back into the office, but will they ever get back to the office at 100%? I doubt they will. I think there's going to be a balance between Zoom, or some sort of online communication, and the office. So life has changed significantly. I think over the last 5 years, COVID really did shake the cage,
Yeah.
and things have changed. I think forever after that. Climate change is going to be another one, mate, which is probably going to shake the cage again and change things forever. Maybe we never see oil at $100 a barrel again because it's just not you. I mean, I know it's going to take a while for them to push a lot of these directives through, but more and more countries are signing up for a switch in energy, taking Russia out of the game. That's another. But it's partly political as well. That let's not
Yeah,
forget that
definitely.
they're
I,
not purely doing it for the greater good.
I don't know that we can think this year though that that's going to be a major change because how do we replace everything that runs on oil and gas
Exactly,
in 12 months? And I
exactly.
know it's been going for more than 12 months, but they haven't found the answer yet.
No.
Wind's not
Well, I think
working
they've
for
have they
base
found the
load.
answer, but been very, very slow on the reaction. Because
Well, we know
from
what the
what
answer. You and I know what the answer is,
we do,
but
exactly. I mean, and I think they do too. But they've been very, very slow. But now it looks like that's picking up a bit more pace, which I think is quite interesting.
we're talking about uranium, guys. By the way,
Yeah,
it's the only thing that makes sense from a eco-friendly, save the planet point of view in the short term. It
yeah,
really is, but it's not a
yeah,
short-term thing because it takes a long time to bring a nuclear plant into operation.
yeah,
And half the reason that we're bullish uranium is because they're churning out um, mobile plants, right?
yeah,
And this will mean a massive, massive difference to even third world countries who can just, have a plant up and running in virtually, I won't say no time flat, but certainly a lot less time than it would otherwise have been the case. The thing with that is the supply of uranium around the world is not even up to scratch right now. So
mm,
to have that supply increase exponentially to cater for demand in the near term, because they've got all these plants, being produced, just isn't there. And we all know what supply and demand means. So that means the price is going to go up, and has been, which is fantastic. So really, at the end of the day, mate, you're a little bit wait and see for the year at the moment.
yeah, a little bit, mate. Yeah, I'm just gonna
Mm.
let things settle down. I don't want to get caught like I did last week, where think that my analysis is right and the direction is right, but actually there might just be a little bit of inefficiency because of sort of people coming back into the market. So I might just let people get back in a little bit and let things just settle down and then go again. I think the market will settle down. It might even be this week. It might be sort of ready to go, but I might just watch it for another week or a few days at least.
All right. Well, I think I left you guys with a couple of trades. I'm not sure, but I'll show you what I'd done over the Christmas period, and it was pretty much with just a very, very friendly dollar CAD. When we left before Christmas, I was trading this false break, and those of you who haven't been into trading buddies or know the way I trade, I pointed out to you those ranges before that I love to trade. I think they're just fantastic. Um, and this was absolute case in point, where we come off the top of this box range, which has actually got a bigger picture to it as well. If you have a look at the monthly chart, and I'll go a little bit wider so you can see it. The monthly chart was suggesting to me, well, not suggesting, was screaming at me that we've got a double top in place and we've got a double bottom in place, which forms the range, right? And every time you come off the bottom of the range, you're seeking the top. Every time you come off the top of the range, you're seeking the bottom, and etc. etc. So guess what? Last time we were at the bottom of the range, so we're looking for the top of the range. Now we've gone into a massive consolidation pattern, which has created another range. And on the weekly chart, this range came off the top. There's the range there. Came off the top. So I was seeking a lower high or a false break of resistance, was what I was pointing out before. We got exactly that on the weekly chart, where we broke, we consolidated, we came back below the trade line and then retested it. So we ended on the weekly basis here, and then seeking the bottom of the range, right? But remembering on the bigger picture, we're looking to buy this, not sell it. But lo and behold, we got another setup where price broke through and then retested the horizontal level. I can't remember what that level was. Well, it was obvious it's through here, right? You can see it. It broke it and retested it. So we entered again here, again seeking the bottom of the range, which was that white box. Ultimate target down here. So we got into that and we finished up trailing our stops, I think, to the top of that channel, or top of that bar there. So ultimately out of both trades here, but look what happened. We came back off the bottom of that range, and don't forget, we're looking to buy this, not sell it, although we had some good fun selling it. Then on the weekly chart, off this trade line and off this horizontal level, which was very, very clear, we got a higher low. And on the weekly chart, it produced this beautiful reversal candle right here on that trade line at that support level. So now we're in the long, where we've switched off the short and we're now trading the long. And that's exactly what I tried to point out to you before. That's what I'm looking for this week. Exactly that, trading ranges. And whilst ever that continues to happen, you'll see me smiling. So continuing with dollar CAD long. The Aussie yen trade that I was talking about, we were looking at a very, very similar thing, but not the same. Game changer bars we talked about, right? We do have a false break sitting here. Exactly the same as I just pointed out on dollar versus the CAD, where we'd broken above, consolidated, came back below, and then retested it. I think I did place an order short under here at one stage, but price didn't come back. But then it gave me a game changer bar there 2 weeks ago. So we entered that last week. And unfortunately, we've been in drawdown pretty much ever since it triggered. I'm hopeful that today, hopeful is a terrible word when you're trading, but I should say I'm confident today that we've actually picked up the lower high, off this big double top that we're looking at, and we will see this continue to fall. If we don't, as I said, I will look to buy this tomorrow if this candle is exactly as it is now. So those of you who are in this trade and were from, probably won't be actually, unless you were in my other group on the Telegram. But if you're in this trade, that's exactly what I'll do in the morning. I'll be placing a buy above that bar, stop loss either below it or below the swing. I'll see what that looks like in the morning. So that's where I'm at. The only two trades I'm in, and I repeat, my best one for the week is going to be Kiwi Swissy, for exactly the same reason that I've just pointed out to you. I've got a double bottom sitting here. I've got another double bottom sitting on the back or on the bottom of this box range. So if I get a false break here, or even a clear high or low off that trade line, then I'll be looking to trade that long. So the reason I'm harping on that is you've just seen, those of you who are here for the first time, pretty much my MO for range trading. That's exactly how, and that's why I love it when it happens. It's pretty clear, and it's not that difficult. So that's where I'm at, mate.
That sounds good, mate. That sounds good. No George today, so I
I'd say
guess
George hasn't got his clock on that says
well, he's probably.
we're back in action.
I mean, if he's had any if he would have had any sort of week that I had last week, he's probably done the right thing. So
Okay,
he may well be doing it for the right reasons. But yeah,
fair
great to be
call.
back anyway, mate. Great to be back in the hot seat, and good to see you this year,
Yeah,
and
you too,
everybody else
buddy.
as well.
Has
Um,
anybody got anything they want to share with us as far as the 12 months ahead is concerned? Would be more than happy to entertain your thoughts. That'd be great.
yeah, or even
Uh,
how their first week has gone.
yeah, have you been trading? If so, how so? You're you're all shy.
All shy already, yeah. So early days, early days. We'll heat them up, mate, as the year goes on.
Without a doubt. All right. If there's nothing, then we'll say goodbye. How about that?
Sounds good.
All right, guys. Thank you for being our trading buddies for the day. I see no questions. I see no opinions in the chat box. So we will see you next week. Lex and Zachariah, you are more than welcome, and lovely to see you in the room. Have a great week ahead, and hopefully you put some money in the bank. We'll see you next week. Bye bye for now. Now, see you, mate.
Bye, mate.